Did you know in Canada, the average price for a home is up to $685,000? And even worse, did you know in Ontario, the average price of a home sells for over $750K? As a new real estate investor, this makes things incredibly challenging to find a property within your budget that you can actually qualify for. So how can you overcome these challenges and actually secure a property without involving a traditional bank or having to save hundreds and thousands of dollars as a down payment? In today's video, I'm going to share with you my favorite creative financing strategy that will actually allow you to buy whatever property you want without a traditional bank financing or the need for a big down payment. Today, I'm going to share with you the secret of seller financing. Whether you want to call it owner financing, VTB, vendor takeback, seller financing, I really don't care because it's all the same thing. Essentially, this is a creative financing strategy where the seller acts as a bank and finances the full purchase of the property directly to you as the buyer. This eliminates the need for traditional bank financing and can be a great option for those who don't qualify for a traditional bank loan, or like me, for those who don't have a big down payment saved up. Think of seller financing like buying something on layaway at Walmart. So let's say you find this nice outdoor patio set that you want to purchase, but you don't have the $1,500 up front to pay for it all right now. Instead of paying for it all up front at once, you can make smaller payments to Walmart over time, but today you still get to go home with that great new patio set. With seller financing, you get to select a property that you want to purchase and make small payments to the seller over a period of time until the property is paid down or the loan is fully paid off. Just like buying an actual patio set on layaway at Walmart, this allows you to own the item without incurring a large debt all at once. Now in seller financing, it's the same thing. This allows you to own real estate without involving the bank or incurring a large mortgage. But the best thing is you get to own and operate that property from day one. And you get to benefit from all the great aspects of real estate investing like cash flow, appreciation, all without needing the bank or a massive down payment. Now let me hit you with the top 3 benefits of this creative financing solution. Number 1, more flexibility. Now this can be super helpful for those people who have less than perfect credit or don't have that big down payment that everyone's talking about. The seller might be willing to negotiate a better interest rate, better repayment terms, or other general terms that better suit your needs as a buyer. Now with this method, anything goes. As long as you and the seller are able to create an agreement, you're gonna get that perfect ice cream sundae sort of a deal. Number 2, it's a potential solution for those who don't qualify for a traditional bank loan. Now, if you don't qualify for a traditional bank loan, seller financing can be a great alternative. Now, like I said, the seller is gonna act as the bank, so they may not have the same strict requirements that the bank does. This means that those who are self-employed, have less than perfect credit, or are otherwise unable to secure that traditional loan, you still might be able to purchase a property and get into the investment game. Number 3, this is a quicker and easier process than a traditional loan. Going through a bank to secure a loan can be a lengthy, drawn out, and complicated process. Trust me, I know. But with seller financing, the process can be quick and easier than ever since there's fewer parties involved. It's just you and the seller. This can be really helpful in a competitive real estate market where time is of the essence. While it's important to note that these terms may not be as favorable as a traditional bank loan, seller financing can still be a great option for those looking to purchase a property without involving a bank or, again, saving that massive, unrealistic down payment. Make sure to watch with me all the way to the end because I'll walk you through a step-by-step example of how the numbers actually pencil out on a seller financing deal. So now you know what seller financing is and why it's a sick creative financing strategy. But how do you go about securing a property using seller financing? This can be done by searching properties that are for sale by owner online, or you can work with a local real estate agent who specializes in investment properties. And if they're able to pitch the seller on this financing option, you could find yourself a great deal. Now, my secret is to contact expired listings in my area and speak with the sellers until I'm able to find a great deal with a seller willing to finance their property. Now, once you've found a potential property, you'll want to negotiate the terms of the agreement with the seller. This may include purchase price, down payment, interest rate, repayment periods. Like I said, anything goes as long as the agreement works for you and the seller. Let's take a look at an example. What I'm going to do is compare a seller financing deal compared to a traditional bank financing deal. Let's use a multifamily property at $500,000 with a vendor takeback or VTB of 10%. Now in the seller financing example, let's assume the seller is willing to finance 80% of the purchase price, which comes to $400,000. Now the remaining 20% or $100,000 will be paid by you as a down payment. In this example, the seller agrees to an interest rate of 6% over 25 years. This means that your monthly payment of the loan will be approximately $2,571.89. Additionally, the seller is willing to provide you with a 10% VTB for $50,000. This means for you as the buyer, you'll only have to pay $5,000 per year for the first 5 years, and you're only required to bring half the down payment. Now compared to traditional bank financing and assuming a down payment of 20% or $100,000, you're gonna need to secure and qualify for a loan of $400,000. Now let's assume that a traditional bank financing rate of 4% over 25 years. This means that the monthly payment for you is going to be $2,108.02. All right, let's compare what we got. Comparing these two options, you can see that the monthly payment for the seller financing option is higher at just over $2,500 compared to the traditional bank financing option, which is just around $2,100. However, the seller financing option allows you to secure that property without involving the bank, and the little VTB would save you an additional $50,000 with a smaller upfront down payment. And as a bonus, the seller was way more flexible in the terms of the agreement, which definitely would not be the case using a traditional bank. Seller financing can be a great alternative to traditional bank financing for purchasing an investment property. It's important to do your research and understand the risks involved before making any investment decisions. But listen, if you're a new real estate investor, or even if you're a seasoned one looking for creative financing strategies to buy real estate without involving the bank and without saving for a massive down payment, then seller financing may be worth considering. And if you're looking to supercharge your creative financing strategies, why not combine this with the powers of long-distance real estate investing? Check out my other videos on long-distance real estate investing to supercharge this creative strategy. It's Isaiah Henry, just like the chocolate bar. Thanks so much for watching. Don't forget to smash that subscribe button and lightly tap the like button for me, and I'll see you all in the next video.